Can you review the correction between oil and the oil companies? Oil's around 60, but the companies are trading at or near all-time lows, and all-time is a long time.
Yeah, well, they're not really trading at all-time lows. I mean, if you look at a chart of the XLE, it's not at the all-time lows. So again, that's not quite accurate. If you want to be accurate. So at the end of the day, the valuation, what's fair, what's the right multiple. Don't forget that if you think of an energy multiple right now, all right, if it's trading at a cheap multiple or a low multiple, that's because the earnings are probably wrong. Okay, so you know how to do that, right? If you have a company that goes, can I get in here? Yeah, I can. All right. So if we have a company, let's just say we have a company, an energy company. We'll just call it company ABC. Okay. And I'm going to take ABC. The company trades at $10 a share. Okay. So it trades at $10 a share. Now, according to Wall Street, they're going to make in terms of earnings per share. The company is going to make, let's say that they're going to make, I don't know, $5. This would be a really good company. Trades at 2 times earnings. ABC is at 2 times earnings. Now, what happens if the right earnings number, because this is just an old wall forecast. Imagine that. You go with what Wall Street thinks? Oh my God. Now, what happens? What happens if they make $1 in earnings? What is the multiple? 10 times. So it's not 2 times. It's 10 times earnings. So that's how the math works. So anytime you see any of these people, particularly on CNBC, all these people that don't know anything start with, well, the valuation's attractive. They don't know. Do you think that the reform brokers ever built an Excel model of a company in his life? No. You do have people like former old Wall director of research, Stephanie Link. She always starts with valuation, but she doesn't know what the right numbers are. So again, be careful with valuation. For a long time, pre the internet, a lot of people on Wall Street sounded much more intelligent when they started talking about things like valuation. But again, my 5th grader could tell you what the multiple is on anything using the wrong numbers.
Keith, I know you're bearish semiconductors and we're in quad 3.5, but Micron seems to be undervalued due to the China trade war, and the stock has been beat up hard. Do you think this could be a solid value play? Love Hedgeye. Love the Twitter pic of the crew in front of the sleeping giant. Thunder Bay Flyers, baby.
Oh, thanks. That's cool.
So I guess it's just
Micron's a great example of what I just like. Pull up the multiple, Jonesy. You can find it should take you about two minutes if you want to find Micron's multiple. Okay. So let's just look at this one. This is actually
let's see if I can do it.
See if I can get see if even Jonesy can do it. All right. So Micron trades on a 12. Micron's actually pretty close to this one. Let's just use the ticker, all right? So instead of Micron, let's just take this out. Let's just do Micron. It actually trades allegedly at 3 times earnings. 3 times, trailing 12-month earnings. What is in the trailing 12 months? Peak cycle? Yeah, peak of the semiconductor cycle. So on the trailing 12 months of earnings, where earnings weren't negative year over year like they will be for a lot of semiconductor companies in the current quarter, it looks cheap. This is a beautiful example of the simplicity between what looks cheap or appears cheap, I think you said it seems cheap, is not what it is. Again, try it with a boat in Thunder Bay, since you complimented both my friends and that beautiful lake behind us. Again, just try it with a boat. If you think the water's only 1 or 2 feet deep and it ends up being like 6 inches deep, see what happens to your outboard motor if you're going 40 miles an hour into that. I mean, it's going to be a problem, and that's what happens with companies like Micron when they guide down. Again, I'd say Micron's going to look cheaper and cheaper and cheaper until they guide you to the numbers like Avago did or Broadcom did on Friday.
Okay.
It's a classic mistake that people make, is that they start with valuation. I never start with valuation, ever, okay? I look at valuation after I start with where is growth and inflation going, both top down and from a company bottom up perspective. Once I know those things and the valuation is cheaper, well, obviously I prefer that. But if it's getting more expensive too, on the other side, we had this debate this morning. I had this, wasn't a debate really, it's Andrew Friedman's making the case that Disney is expensive, yes, but it's going to get more expensive. So that's the whole point. People that whine about it being expensive, A, don't own it, B, aren't willing to buy it because they think they missed it, and C, they're probably going to be whining about it the whole way up. So again, expensive gets more expensive when growth is accelerating, And expensive gets cheaper when growth slows, particularly in the first for the first time. Which, by the way, the upside down of that pair trade for us, and very infrequently do I have a natural pair, but we're short Netflix and long Disney.